Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since the topside rejection at 69 cents, a key level that was previously seen back in June, over the last 4 challenging days, the market is held bearish and still struggles to snap out of the bearish claws as the market now descends further and looking towards a region of 67.80 that could actually descend further to 67.35, while the 60-day moving average is seen just below that at 66.90. In light of the technical pattern, it is bearish, and therefore after the last 4 days and from that topside rejection, supports for further weakness. Having challenged the topside once again around the region of 112.4060, euro has managed to not sustain, and now backing away quite sharply, could see a further slide, that is towards 111.75 or down towards the target of 111.35 and reassess from there. In light of the pattern, I feel the market is breaking down after the recent rise. Along with that, the dollar index, which measures the greenback strength against a basket of 6 major currencies, is slowly edging higher at 99.60 after printing a low of 99.25 last week. In economic data, the US retail sales fell short of its target. However, while June's reading came in softer than projected, it marked the third consecutive month of retail sales growth and was better than March and February's negative readings. The retail sales data is seen as an important barrier of consumer health, which rose less than expected in June after climbing 0.2% from May, but below expectations for a 0.6% increase in June. So if the euro wobbles, let's see if the market does take a tumble away from that 112.4060 area, and as I mentioned, down to 111.75 to 111.35. The dollar yen, well, the market is back to test this topside level, which is seen around 139.35. If breached, which does look favourable, then that would confirm the outside range day, and therefore put 142 as a trajectory target and reassess from there. I like the way this RSI is shaping up, and therefore should find more focus towards or above 139.35, and therefore maybe see the bull run carry on. Sterling, well, all eyes will be on today's UK CPI data. After holding very high around the 8% area, the market may find another disappointing number that would promote a 50 basis point rate hike by the Bank of England in August. Still, nevertheless, the market is still maintaining the 4-day bearishness. I feel that any pullback which is close towards its target now, anywhere from 130.30 and below where we're trading at 130.20, is that the market may find a little bit of momentum coming back into play, and therefore keep an eye on the downside as a snap could come through if the number is disappointing and strengthen the case to a 50 basis point rate hike. Gold found momentum and back to levels that were recently seen back here in May and also in June. I feel that the overnight rally to a 7-week high may be putting a little bit of strain. Along with that, I'm seeing divergence with the RSI. That means that from the peak and the next peak, the RSI has not maintained and dropping away. Therefore, could see a snap to the downside and bringing in a target around 1,968 to 1,956. Any advancement, I feel, should find contained anywhere from the 1,980-90 area. And oil regained its momentum after closing above the $74 handle, and therefore looking back towards that 78 call that I had just recently. Even though the trend has broken, we didn't get a close beneath the 74 handle in New York, which promotes a further bullish case. With any pullback now, see support around 73.80-90. Well, that's a wrap. So thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.